Fantastic. Good morning, everyone. As everyone pops on and starts connecting to audio, if you could please remember to stay muted just so that we're not all talking on top of each other. Hi, Paris. I just met Paris the other night at the trade show in Orlando, so it's nice to see your face. Good morning. We're going to get going here in just 2 seconds. I'm going to give it just about 10, 15 seconds to make sure anyone last second joins, and then we'll start introductions. And then I will get out of the way so our guest of honor can speak on this exciting program. So let's go. I think everyone is in. Okay, so there we go. Good morning, everyone. Again, my name is Mike Pearson, as my thing says here. I am your FAMP Government Affairs Chair for this year. We're very excited to be presenting this program with you today. The FAMP has worked hard with the OFR and some other organizations to get this program released out for mortgage brokers to work with. So it's exciting to have United Wholesale Mortgage on the call to explain the program to us and go through kind of their process. So without further ado, let me introduce Mr. Eric Mojica. Eric began his career in the mortgage industry in 2000 as a loan officer with Quicken Loans. He was there for 4 years, leaving as an executive mortgage banker. After that, he spent a year as a loan officer in the wholesale channel before moving to City Mortgage Retail for 2 years. Then he left the industry in 2008 to work in pharmaceutical sales, which provided world-class training and sales, world-class sales training and experience to the B2B channel there. And then in 2012, we sucked him back in. He's back in the mortgage industry, thankfully, and started working with United Wholesale Mortgage. Is advanced as a team lead and then to assistant vice president role within 3 years. Wow. Since 2019, Eric has been the VP of sales and helps lead a sales team of over 700 account executives to keep. Now I know I had this must be an old bio because this says to keep UWM the #1 wholesale lender and the #2 overall mortgage lender. I don't think that's accurate anymore. We've got to update our paperwork here. Eric has 2 children who he spends most of his free time with and enjoys tennis and eating out at new restaurants. So great bio, Eric. Thank you for joining us today. The floor is yours. And yeah, correct me. That #2 is not correct anymore, isn't that? Is that accurate?
So, last quarter, we took over the #1 overall lender, and we hope to continue that for all 4 quarters this year.
Fantastic. Well, thank you again for leading us on this conversation. The floor is yours, and I'll step out of the way.
All right, thanks, Michael. Thank you, everybody, for joining us today. It's my pleasure and honor to be presenting in front of you all. You've been a great partner to us, and we're excited that we have this program to explain. It's been a big hit so far. My understanding, looking at some of the numbers, there's already been over 3,000 borrowers, hometown heroes that have been able to take advantage of this program since it was released last year. We've had it here in wholesale for a few months now, and what I'll just do is go over the basic parameters, eligibility, some of the talking points, and hopefully this helps you get some more business and take care of the people that are working hard in your communities to find homes in these same communities. So if we can get, there we go. So, quick explanation as in case for anybody that doesn't know exactly what it is. It's through the Florida Housing Finance Corporation, and it's eligible for frontline workers. There's over 100 or about 100 eligible professions: law enforcement, firefighters, healthcare professionals, teachers, educators, childcare employees, and then of course, active military or veterans. And it provides down payment or closing cost assistance to first-time income qualified home buyers that are in one of these eligible occupations, and helps them to purchase their first home. All right, so how it kind of works is it's down payment and closing cost assistance as a second loan. And this down payment assistance can be used for the borrower's down payment. If it exceeds the minimum borrower requirement, for instance, if it's only a 3% down program, any money left over can be used to just basically reduce the loan to value. It can cover any reasonable and customary closing costs, prepaids, things like that. The amount of the grant or the assistance from the second loan will be up to 5% of whatever the first loan amount would be. So, example, on a $400,000 purchase of a primary residence, if they put down 5%, the first mortgage amount would be $380,000. And so the borrower could get up to 5% of the $380,000 towards a down payment and help with that. The second mortgage is, or this would be a second mortgage that's not forgivable, but there's 0 interest, non-amortizing. There are no monthly payments. And so it's, not quite free money, but it's basically assistance that is going to be due only if the borrowers were to sell the property, if they want to take advantage of a refinance, if they did transfer the deed over, or if the homeowner decided they no longer wanted to occupy this as their primary residence, turn it into a vacation or rental home. At that point, or at any of these points, that second mortgage would be due in full. Parameters, so Florida only, obviously. The beautiful thing is it's available on all the different loan products, conventional, FHA, VA, and USDA. It's available as only a 30-year fixed program. As we mentioned, this is to help our hometown heroes purchase their primary residence. So 1 unit, single family residences and planned unit developments. It is eligible for 2 to 4 unit properties under the natural assumption that the borrowers are going to occupy one of the units as their primary. Thankfully, it includes condominiums, manufactured homes on certain products. I think VA is excluding manufactured homes, but manufactured homes for conventional FHA, mixed use properties qualify. The parameters in terms of FICO, 640 minimum FICO. If it's a manufactured home and eligible for the program, it's a little bit of a higher bar. They need a 660 FICO. And we go off approve eligible findings. We need a max DTI of 50%. And if it is for a manufactured home, the program is going to cap the debt to income ratio at a 45%. As we mentioned, these are for first-time home buyers. So that's anybody who has not had ownership in a property in the last 3 years. And when they do this program, the borrowers cannot own any other properties at the time of closing. But this nuance excludes veterans or active military members. These requirements don't apply to them in terms of needing not to own any other properties or be a first-time home buyer. And conforming loan limits only. There are no high balance loans eligible for this program. So for parameters here that you need to know, it's got to be originated in the broker channel. So if you are with a correspondent lender, all of these loans need to go through the broker channel with us. We cannot allow non-occupying co-borrowers or co-signers, so it's just got to be the natural borrowers on the loan. No escrow waivers are allowed when it's a conventional program. We do not finance co-ops on this program, single-wide manufactured homes, or any properties that are in a land trust. One of the biggest things we've had lately in the purchase market are temporary rate buydowns. On this specific program, Hometown Heroes, they do not allow the temporary rate buydowns. And we'll get into some of the details about the interest rate later. And there are no piggybacks on this. You can't do a first and second. So no HELOCs associated with this program for your borrowers who want to take advantage of the Florida Hometown Heroes. So for eligibility, going further, at least one of the borrowers on the loan has to be in one of the eligible hero occupations. We will perform a verbal verification of employment, indicating full-time employment, which 35 hours or more would qualify. These borrowers have to go with your first-time home buyer counseling, and there's also a form that they will complete with their package and in their closing package as well, that they're attesting that they are in this occupation certified and meet the eligibility, so that we can follow the spirit of the program, which is to take advantage for people that are in these frontline occupations. And there is, as I mentioned, a really large list of eligible occupations, over 100 of them. I didn't want to list them here because it's just a very long list, but if you go to floridahousing.org, there's a link you can click on. It's going to list the parameters and types of the classes of professions and some of the details underneath it. Eye doctors, chiropractors, educators, quite a big list. And, another little nuance for eligibility for HFA Advantage, which is Freddie Mac. Veterans and active duty military members, they are exempt from the first-time home buyer program requirements and counseling that I mentioned earlier. So if you use Freddie Mac, that's when your veterans and military folks don't have to go through the extra steps or pay the extra money for homeownership counseling. For further eligibility, there's a typical loan limits. Again, this will be eligible or available for you to view on Florida Housing Corp's website. Also, for those signed up with UWM, which I believe would be everybody, if you log into our website and go to the source, which is our, you can ask it any questions regarding mortgages, and it'll pull up the information for you. You can also find this chart on there, but there are your typical loan limits, and it also lists your income limits, because again, this program is based on your profession, as well as making sure you're underneath the income limits for each county. And so they make it very easy for you to see on this quick snapshot. You can see on the right-hand column, Hometown Heroes income limits. eligible income on the application. So if there's two borrowers, they both have to fit underneath in Alachua County, 122,850. So that's not just for the hometown hero. The income is the combined eligible application or the qualifying income that we use on the 1003. And these are pretty high limits if you're used to Home Possible or Home Ready and you're familiar with the AMIs there. Many of those are going to go off 80% AMI in order to take advantage of those home affordability programs. The great thing about this program is it gives you a much wider limit to use. And I think a lot of these professions we already know, a lot of these frontline workers, educators, generally they're maybe in the $50,000 to $80,000 a year income range. So plenty of room for them to qualify. And you can see the loan limits based on the loan program. Conventional, you can loan up to $647,200 with the new conforming loan limits. And then your government programs, they have their standard loan limits. So just make sure you're following those as you go out there and try to serve your communities. Pay attention to the loan limits, and then of course, make sure you know the income limits in your specific areas. I'm sure none of you are really focused specifically, always only on one county. So just kind of get a feel, maybe build yourself a little chart or cheat sheet to know your most common areas that you might be serving. What are the average income limits there? So when you speak to your realtors, speak to potential prospects, your friends and family who might be in these, in these networks, you kind of have a good idea of what the max income would be for them to qualify and take advantage of the 5% down payment assistance with this. Program options. So another nice thing, we look at area median income, and when you do your calculation on what the income on your 1003, if your borrower's income is below 80% of the area median income for that county, another great benefit is there's going to be reduced monthly mortgage insurance on the loan with us. And if they're above 80%, which means they still have to be under the restrictions, but if they're, if they're above 80%, but still within the guidelines, it is just your standard monthly mortgage insurance on the loan. But just do know that for the lower incomes, they are going to get a noticeably lower monthly mortgage insurance, which always helps when you're selling a loan. Show them that lower monthly payment. That's what everybody focuses on. It seems like the rate is important, but they really look at that monthly payment. And most of these loans are going to have mortgage insurance on them. Of course, this is down payment assistance. So, make sure you're highlighting that for your realtor partners, whoever's sending you this business or the borrowers you're talking to, that they also get the benefit in a lot of cases of a lower monthly payment with the mortgage insurance factors. And then of course, on your government loans, the mortgage insurance rates are what they are. Those aren't determined by the AMI. That's only for your conventional programs that you have the potential for reduced monthly mortgage insurance. So for locking, the nice thing is there's no real pricing associated with the product that you might used to. So normally when you look at a rate sheet, you're looking at different rates and seeing what's going to cover my compensation or what's the rebate. That's very simple and streamlined with Florida Hometown Heroes. There's one daily rate for the program, and how we've worked it out with Florida Housing Corporation is the compensation that you will get as a broker with us is going to be 1.5%, which is important to know because I'm sure you have a lender paid comp plan set up. If you're an owner, you have a lender paid comp plan set up with us. If you're a loan officer, you have a comp plan set up with your owner. The compensation on this program is always going to be a flat 1.5% coming directly from UWM. No additional fees can be made. Again, this is a down payment assistance program. It's very generous to the borrowers and to the mortgage professionals using it. So it's just going to be very simple with the rate. And, if you're used to making more than a 1.5% comp, we completely understand. This is a deal that we have worked out. Broker channel, 1.5% comp. We cannot waive the underwriting fee on this. There's our standard underwriting fee. And then you will be paid a flat 1.5% of the first mortgage amount when you use this program with UWM. Locking, it's a little different than what you might be used to if you work with UWM currently. With us, you can lock weekends, nights. So it's very flexible normally, but on this program, because the rates are determined through the program, we have set locking hours Monday through Friday, 10 a.m. to 5 p.m. Again, also, we have a very strict policy to take advantage of this program here in the wholesale channel. We're not allowed any relocks or extensions once the original lock has expired. So you have to pay very close attention to your deadlines, your contract date, any contingencies you have, any delays you might run into on this program. Keep in mind, we only have a 30-day lock period to deliver this loan. And so, some best practices we've had for our brokers who've been using this program, they may wait until they submit the loan into underwriting and then they start the clock to lock on 30 days. Some of them are very cautious. They might wait till the appraisal comes back. I know the market fluctuates. These programs, the Florida Housing Corp has a set rate they publish each day, which is why we have these set locking hours. It's like a manual lock request when you use this, because we have to submit it over to Florida Housing Corp for the initial lock. And this last bullet point, there's really only one rate available, which is kind of nice too. If the rate is 6.375 in the program, that's what it is. Nobody's out there selling this program, undercutting each other, overselling. It's just that one flat rate available per day. It's not posted on our rate sheet. It's something you'll see when you have the loan in our system. And unfortunately, when the market does move, these rates could be subject to change during the day. So if, for instance, today you're looking at a 30-year conventional rate of 6.25, if rates are like flying around, maybe by the end of the day, the Housing Corp decides it's 6.375. If you send in a lock request today and we need to process it, there's a potential that the rate could end up being higher because we can't control it. So that's one of the downsides of the Florida Housing Corp controlling the rate, is that we don't really have say of, when you lock it with us, we got to go to them, and then we got to be at the mercy of what the market's doing when they receive our lock request. So the locking process, when you lock a loan with us, we're going to lock in at the rate offered at the time, what we quoted in our system when you process the lock, not the rate at the time you requested it. The nice thing is, if the rate improves between the time you want to lock it with us and the time we go to the Florida Housing Corp, you'll actually get the lower rate too. So it's not always, it doesn't just move in the wrong direction. If the rate worsens, we won't lock it until you tell us it's okay, because we understand you might have told your borrower 6.25. By the time we can put in the lock request and move it up to 6.375, rather than lock it at that and just assuming you'll want it, we reach back out to you and ask you, and we'll copy your account executive so that we make sure there's a lot of eyes on this, that the rate that you requested has now changed and is higher, and ask you to confirm that you want to go ahead and lock it at that higher rate. Gives you an opportunity to go back, explain to the borrower that, hey, the rates are what they are. Florida Housing Corp has determined this, and the way the rates go, sorry, we weren't able to lock it in time, which, as originators, I'm sure you're used to this happening with reprices in the market. Just know that this is more of a manual lock process for us to go to the Florida Housing Corp. And so that's why when the market's moving, we can't necessarily promise the rate, but it shouldn't generally fluctuate that much. And again, you could still lock and get the benefit of an improved rate if that's the way the market moves when you request the initial lock. Here's what it looks like on the website, just so you can kind of know. As I mentioned, there's one rate per product, FHA, USDA, and VA, at this snapshot in time, which is not today's pricing. This is just a snapshot from when this presentation was created. You can see 6.25 was the rate. There's different programs, HFA Preferred, HFA Advantage. These are all pretty much similar rates, but this is what it's going to look like for us. Again, beauty of it is just one rate, one price to sell. Some benefits. So, for us, mortgage professionals here in this group, in the wholesale channel, there's really not options in the wholesale channel for this program other than with United Wholesale Mortgage. So thanks to all of you that helped us obtain this program to allow us to offer it to wholesale. But now we can differentiate from retail LOs and compete with them and keep these loans in the broker channel. Right? You may have had people that maybe and would like to do this program, and in the past, they had to go to a bank or some retail shops that are located there. Now, if you're a Florida loan officer, we allow you to write this to the wholesale channel. And again, we want to make home ownership available and affordable for first-time home buyers. And another beautiful thing is this is not the only down payment assistance that the borrower can be eligible for. So if there's a Home Ready or Home Possible product, that's a home affordable program that they qualify for, this will be on top of that. So again, as we talked about earlier, the intent of the program is these people that are serving the communities, let's try to find them homes in these communities in which they work and serve. So advantage for the mortgage professionals on this call and out there that can use this program, word of mouth. You might find, you do a loan for your dentist's office, optometrists, things like that, educators. Word of mouth can get around quickly. If you work with a teacher with one school, incomes are going to be the same with that whole group. So, it makes it easier for eligibility and getting a network of referrals. It is a wonderful reason to set up courses for first-time home buyers and have something to offer them. Again, you can look at this sheet, it's the people that, the veterans, the people in the front lines, you can offer special courses to them geared towards having this down payment assistance program available, because this is by far the largest program out there that I've seen, offering up to 5% of the first mortgage amount, up to $25,000. That's pretty substantial. And as I mentioned earlier, you can pair it with other down payment assistance programs that are out there. And for real estate agents, so, obviously we have great partners that are real estate agents. They're out there trying to serve their borrowers. For them, they want to make sure they can do as many purchases as possible in this market as well. Eligible heroes can be offered down payment and closing cost assistance program. So, that just makes homes more affordable. If somebody thought that, the recent price increases, even though they've come down, might have priced them out of the market a little bit. If you couple that with higher rates, well, now, you have down payment assistance that can eat up some of the down payment to free up some more money to pay some points, right? Maybe it frees up some money for you to do, anything in terms of what you want to do. Now you can put together the down payment you want because you have more options on the table. So realtors, market this down payment assistance program to everybody that the heroes in your market. Go to the website, find the eligible occupations, think about what's going on in your community, go to your past clients that you might have served, right? The beauty of this industry is we don't want to just be their real estate agent or their loan officer on a one-time deal. I think about it when I was an originator, I would tell them, listen, I want to be like your doctor. Like, you don't go to a different doctor every year. I'm going to do your mortgage and do such a good job because I want referrals, but I also want you coming back to me anytime you have a question on a quote, or you want to tap in your equity, or you want to buy that next home, or if you're at a barbecue or, a swim meet for your kids and somebody mentions they're out looking for homes, we want to make sure that we advertise this to people because it is a great niche and it's just a great way to differentiate yourself. And for real estate agents too, this would be a great way for you to find more eligible borrowers and help them find homes that they can afford. All right, so that's the details on it and the nuts and bolts. I'd be happy to try to answer any of the questions that we might find through the moderators. I will do my best, and let's see what we got.
All right, if anyone has, thank you, Eric, very much. It was great information, and I'm sure we have some questions out there. So please type them into the chat, or if not, we can raise your hand and you can ask Eric some questions. I was just going to ask just a couple, just to maybe get it started here for you, Eric. Is UWM's kind of average from application to closing on this program? What can the agents expect to put as a timeline on the closing date, and of course the originators as well?
So with our standard turn times here, you can see all the programs that are available, conventional or government. On average, we're getting loans clear to close in 15 business days. So, it's great on purchases. We can put these through. It's just, it gets a little scary for originators because the business, everything can go right, but then one thing might trip you up. You might get stuck on the home inspection, which throws things off. But on average, we're not having a problem meeting the 30-day window. There's been a fair amount of fallout, though I can say this, because sometimes, they're looking at us to make sure our lock pull through is pretty high, but some of them have just been flat out rejections. So the one thing we would ask so that we can keep the pull through high so that they continue to like using us for the program at Florida Housing is to, try to make sure the borrower is really well qualified before you lock the program, because that's generally the case we have here. More of the fallout's been through denials and it's been through people not closing in time.
Okay. All right. We have a question. When will marketing materials be available in 360?
I'm not sure how much we have eligible to help market it because this is not specifically like an agency program. We have to work in conjunction with Florida Housing. So if there's not anything in there currently for marketing, I don't know if we're going to have much more to share. I will take that back and see if there's anything upcoming. I would encourage you to go to the website, see anything you can pull off there. But I don't know how many marketing pieces we're going to have that you can put on social media like you normally might be used to for our programs. Like we just rolled out One Touch Closing, new construction, or for HELOCs. Like we'll have marketing for that. But for these types of down payment assistance, because there are certain nuances in other organizations we work through, we might not have as much as you're traditionally used to seeing from our, from our marketing channel. So I'm sorry about that.
Okay. All right. And a question is, can you give us an idea of some of the reasons for rejections?
Our typical ones, income related. So not, DTI, some of those things. Sometimes it's borrower eligibility in terms of income limits, but that's usually pretty rare. They scrub those. But our typical rejections are credited income on these programs, whether they be conventional or government.
Okay. And someone did ask a question about the copy of this presentation. Yes, we are recording it, so we will be sending out to all the attendees, as well as it will be on the FAMP website under our webinar library as well. So Eric, I know you said limited capabilities as far as funds available and so forth. Do you feel like that this is going to be 10% of your overall portfolio, or does UWM have any idea on that yet?
It's not near 10% at this point.
Okay.
I'm on like a list of loans we get, like it's showing all the locks. It's probably still 1% of what we do. We're primarily still a conventional lender. FHA really ticked up in this market. So I'd say probably, close close to 80% of what we're doing is conventional, probably 15% FHA, and the rest are the non-agency, non-QMs. So this particular program is still a small chunk of what we do, but it has picked up a little bit more. And I think, as we've had this program with UWM now for a few months, it's given more of our loan officers and networks a little more time to kind of get their teeth into it and sell it out there more. So I'd expect it picks up more.
Okay, we have a couple more questions. We still have some time. I've seen varying lists on allowable occupations. Just wanted to verify if it applies to security guards.
Actually, it even says that on the floridahousing.org website is, list subject to change, but I believe they put their most updated ones there. I couldn't necessarily remember if security's on there. And some of the titles are a little bit interesting. So you're going to have to really scrub through that list because you might be looking for educator or teacher, but I think it might be under like classroom something. So I'm sorry, I can't remember off the top of my head if it's in there, but I would go off what's on their website because they do take into account that list can change. And I would always double check that when you're meeting with the borrower and even show them too that, as a part of your pre-qual, that this is how we're going to make sure you're eligible. Like you have to be certified as a teacher, for example. I can get back to you if you can't find it on the website. It would make sense.
All right. There's a couple more questions. Work hours. Is it firm a minimum of 35 hours a week? In other words, is that the minimum of 35 hours a week worked?
Yes, full-time, minimum 35 hours. That's on their website too.
Perfect. Do admins that work at a school in the front office qualify? It's probably going back to the website, right?
Yeah, but and that's where it kind of lists a bunch of like subcategories. And I believe, yes, if you're in a school and, a classroom setting or in some sort of like, for instance, optometrist office, anything is eligible.
Okay. Question, since we're still on income, and a couple questions here. How do you prove 35 hours for self-employed borrower?
Self-employed.
Amount of the annual gross income, probably, right?
I've never been asked that. So if we can write that
Question.
one down. Self-employed, I'm not sure. And it didn't explicitly say you can't be self-employed, but that would be, you're right. I mean, if you can do, again, I'm just kind of speaking here. And again, I'm a sales guy at heart. So my answer is always, let's do it. But I would think maybe they look at your 2-year history, and if you can meet that, they would just assume you're a full-time, qualified person. I don't want to imply though that I can sign off on a self-employed hometown hero being eligible. That is one I'd have to check with our risk and credit policy team. I might even rescrub the website, so we can get back to one of you directly if you want to get back to the mortgage professional.
Right. The same individual said they have a client who is occupational therapist who is self-employed. That's why the question. Question is, how do we set up this loan in UWM? Maybe the program itself.
So pretty much like we built it in any program we have. You can price it out and easy qualify. You price it out, submit the loan to our website, and you just select it as a separate product. So I believe it's in there as FLHTH. It'll come up as a list of eligible products. You'll know specifically that that's the one you're going to want to use on top of whatever conventional FHA, VA, or USDA product you choose.
Okay, great. We have a couple more minutes for any last questions if anyone wants to type them in quickly. But in the meantime, I do want to thank UWM, Eric, and all of your team. You are wonderful, wonderful supporters of your industry, our industry, and of course of FAMP, and we value our relationship with you, and we are happy that we can work in tandem together to offer this program and to put as much information out there as we can for any type of programs available, especially for first-time home buyers.
Well said, and I agree completely. Thanks for being our partner, and it's great.
You're welcome. All right, I'm just getting thank you and thank you. This is awesome. So I am going to wrap it up for all of you again that are on today. Thank you for taking your time today and this afternoon, Friday afternoon. I'm sure if there's any questions that you have specifically on this program, that you can contact your AE at UWM, and they'll be able to answer the questions. And if you're a member of FAMP, thank you. If you're not, please consider joining. These are the type of educational webinars that we will continue to put on for our licensed originators. So thank you all again. And Eric, great job.
Thank you very much. Have a great weekend.
Bye-bye.